Hi, everyone. I hope you've had a wonderful Labor Day weekend and that you're having an amazing beginning of this fall. It's been a while, but this week we're joined by Julio Vasconcellos, who's an extraordinary founder who's had crazy ups and downs in Latin America and the US. He will talk to us about it before transitioning to being a VC, which has led him to now publish kind of an annual report called the Latin American Digital Transformation Report. And so we're going to hear about what the state of the Latin American tech ecosystem is this year. So without any further ado, let's get started. Welcome to episode 43, Julio Vasconcellos and the State of Latin American Tech. So, Julio, thank you for joining us.
Thank you, Fabrice. Great to see you live and be on the show this time.
So it's been a while, and I think many of our guests don't know who you are. So why don't we start with a little bit of background on your history and what led you to entrepreneurship, and let's take it from there.
Awesome. I'll keep it short, and we can obviously go a little bit deeper along the conversation today. But I've been working in tech now for almost 20 years at this point. About half that time in the US, in the San Francisco Bay Area, and then half the time here in Brazil, where I'm originally from. And I think, like yourself, I started out as an entrepreneur, as an operator. Went through a few different sort of product management and growth roles. I think probably most notably went to work at Facebook in the end of '09, started beginning 2010, when the company was really starting to accelerate international expansion, and I was responsible for growth in Brazil. And then that's how I moved back home.
Were
Back
you the
home in
first
2010,
employee in
and
Brazil, or?
I was the second Brazilian at Facebook. I think probably there were, I don't know, 600 people when I first joined. Everyone still fit in a single building, so it was, compared to today, at least, a small company. And then I was the first person in Latin America, so I was, sort of officially look at the whole region, but really with a mandate of having the company grow in Brazil. And then that's how I got shipped down here.
Makes sense.
So made a way down, remembering, for those of you that remember back then, this is the year that the cover of The Economist was, Brazil takes off. I had just spent 5 years in Silicon Valley, felt like I had great experience working in tech and wanted to do the same thing down here in Brazil. I moved down and through Facebook, but really with an idea that I wanted to start my own business. And that's what I did. A few months later, I started a company called Peixe Urbano. That was a daily deal company. We did everything actually in local services, but started with that Groupon model, copying what Groupon had done so successfully up to that point in the US, and launched the first one here in Brazil. We can get a little bit more into that, but I think, Fabrice, you alluded to that it's been quite a roller coaster ride. But just to give some sense of magnitude there, we went from my co-founder and I working out of his living room in Rio de Janeiro to over 1,200 employees, 6 different countries all over Latin America, a company doing over $100 million a year in net revenue. So from a geographic standpoint, managerial standpoint, financial standpoint, a big company. Fast forward 6 months, we're on the brink of bankruptcy, having to turn around the company, which we eventually did, and sold it to Baidu at the end of 2014. And then at that point, actually, I moved back to the US. I took a job at Benchmark Capital, which had been our sort of Series A lead investor at Peixe. And they said, look, why don't you come out, hang out here, be an entrepreneur in residence. We'll do something together. And that's what I ended up doing. Joined as a founding CEO of a company called Prefer, based out of San Francisco, looking at the future of work in the United States and how that was going to be transformed. Long story short, hit our head against the wall for 3 years trying to get to product market fit, and never did. And then shut down the company about 3.5 years after we started it. During that whole period, I had actually started to invest. I had started to invest, first as an angel investor. I think like many of the folks here, like yourself, almost more like a hobby, right? You have some friends who are starting something, you want to put a little bit of money kind of to be along for the ride, and started seeing that was getting a lot of traction and making some promising early investments, and then started with a group of 4 other friends a fund called Graph Ventures back in 2011 with the idea of just scaling up what we were doing individually, right? So let's start investing against our network, people that we know are great around the world. And we did almost 200 deals over the course of 6 years all over the world. And because I was in Latin America, I was leading a lot of what we were doing in Brazil and elsewhere. I think
Okay, so
you and I.
so your friends were in the Valley. You were still based in Brazil.
Exactly.
Okay.
I was in Brazil and running Peixe Urbano at the time, which
Oh,
at the time was, sort of the highest visibility startup here. So a lot of folks would come knock on my door, say, look, you did this a few years ahead. Can you help me out? And through that, I would see people that were building cool companies and would eventually invest in them. I think you and I invested in Melius, for example,
yes.
out of that original, Graph Ventures group. At that point, I actually stopped and started to look at the returns of the fund, and curiously, over the 6 years that first set of Graph Ventures funds, they're all kind of top decile seed funds. But when we looked at the Latin American portion of it, they were performing magnificently well compared to the rest of the portfolio. Just to give you a sense, that portfolio is almost at 20x today, as opposed to 6 or 7x for the global portfolio. And it sort of rammed home to me an idea that I think I understood in theory, but until you really live it, you don't really accept it, which is just how asymmetric the returns in venture can be, right? And there's a massive premium to being the top percent in the distribution, but even being kind of the 90th percentile, right? Sort of the top 10%. And I figured, look, if I focus my attention on Latin America, where I have a big edge as far as sourcing, network, knowledge, I have a good shot at being number one here. And that's when I started a fund called Canary, which was the first seed fund for Brazil. Started it with 4 other partners.
Yeah, no, the power lies real. And actually, we had Brian on the show to share the story and the Viva Real story, etc.
Yeah, exactly. And actually, Viva Real was one of our first investments out of Graph Ventures. I think it was like 2011, if I don't remember correctly,
Okay.
like the seed investment, and that company is now at OLX. So it's kind of funny how these things play out. Yeah, so then started Canary, really to scale up what I had been doing and some of my partners had been doing. Instead of writing $50,000 checks into companies, we started writing $500,000 checks, and that was super successful. And when I decided I wanted to move back home, and I had decided to go into investing full time, I figured, what's the evolution of what I've done, and I felt like doing pretty classic early stage venture, sort of in that Silicon Valley mold is what I wanted to do, and started Atlantico to do that. We're a Series A focused fund, focused in Latin America, overweight Brazil, but really with the idea of kind of taking it to the next step. So I'll stop my monologue here so we can keep this a little bit more of a discussion.
What was the logic for not just saying at Canary and like going and create a different fund? Is you wanted to be later stage, or you wanted to do just Brazil, or because Canary I think is pretty big and doing pretty well, no?
Yeah, definitely we're doing pretty well there, and I think as a founder there, I'm still very active and sort of helping to source and evaluate deals at the seed stage, which is where they focus, right? They focus on kind of being that first institutional check. But I felt that for me, what I really wanted to do was a little stage, and the reason for that is, I think maybe the analogy that I like for what seed investments are like for me, it's kind of like watching a TED Talk, right? It's interesting, you learn something, you kind of meet someone, and you kind of move on to the next one.
Yeah.
But the companies are generally pretty early in their life, so there's not a lot to diligence. A lot of times there's nothing at all to diligence. And because there's so much risk and volatility in the returns of seed, ultimately you have to build a big portfolio, right? And because you're building a big portfolio, you have a lot of relationships, right?
Yep.
At Canary, we've done over 100 deals, and it's hard to have a close relationship with hundreds of founders. And I felt that because I had the experience of being in the trenches and building a company, I felt like part of my edge was being able to bring that to founders and being a closer partner and a sort of closer advisor. And to do that, I would necessarily need to have a much more concentrated portfolio and more concentrated relationships, right? We wanted to, I think, concentrate not only our capital, but also concentrate our time on those few companies that we wanted to support. And I felt like doing that at the seed, concentrating at the seed was just too hard, right? It's just too hard to get to that level of confidence and conviction when
Yeah.
it's, two people and a PowerPoint
It's the
or
main
two
reason,
people
by
and
the
an
way,
idea.
FJ doesn't do pre-seed all that much. We do pre-seed, but we don't invest in competitors. And if you're investing pre-seed and there are 8 teams going after it, it's really hard to tell them apart. Yeah, but you need to, but especially if they're all really good people. And so it warrants waiting until someone breaks out and they're like, okay, this is the people, this is the team to back, and let's go do it. Especially given the power law you alluded to, where the top company is going to get 95% plus of the returns, and so it makes a lot of sense to wait. And you didn't worry about the level of competition. There's already Kazakh and Monashis, etc. You felt there was still an opening, and the market was big enough, basically.
Yeah, and I think it's telling the fact that you said, oh, there's competition. You listed a couple of funds, and really there's maybe half a dozen like scaled early stage funds in Brazil. And the fact that we can list all of them and they almost fit in just one hand just shows how little competition there is, right? If
Mm-hmm.
you think about probably how many funds there are in the block that you're sitting in New York, it's probably a similar number. So the fact that there were half a dozen funds, we didn't think that it was a mature enough market from a competition standpoint. And I think it's been quite telling for us that even as a new fund, I think we're
Okay.
old investors and old players in the market. As a
Yeah.
new fund, to date, we've literally won every single competitive situation we've had down here in Brazil. So I do think we've been able to be quite competitive, even though there's people that were here before
Yeah,
us.
that makes a lot of sense. So just a few comments from the audience. We have Rafael Silva says he's going to apply to Canary for the company he's currently building. And a question about someone wondering if his service would be applicable for Brazil, but I'll let you answer that later. Quick question on your original background. Did you go directly to startups out of college, or did you work at like consulting or banking first, or how did that transition happen? And did you study computer science
So I
or
went
engineering in
to
college, or no?
no, I went to Penn and I did business undergrad at Wharton, did finance and
Okay.
marketing, and went to do strategy consulting in New York City. So very traditional path. I went to work at a company called Monitor Group that doesn't
I
exist
remember
anymore.
Monitor.
That was sort of this offshoot from Michael Porter and Harvard Business
Yeah.
School. And then from there, I wanted to work in tech. I had been in college during the dot-com boom and had sort of seen that from afar and sort of enamored by the world of technology. And I think living in New York in 2004, 2005, which is sort of when I was thinking about what to do next, you don't really know how to get into tech, right? Especially back
Yeah.
then. And kind of for me, what I knew was, okay, all the innovation or
Yeah.
everything new is happening in Silicon Valley. So I have to like figure out how to get there. And I took maybe the most obvious way to getting there, which was to apply to Stanford Business School, which is where I went next. And then from then just stayed in the Bay Area, got into the tech world.
Okay, that makes a lot of sense. So why don't we talk through a little bit the Peixe Urbano story, because that was pretty insane roller coaster. And maybe once we get there, maybe we'll highlight also how different it was to be operating in Brazil back then to Silicon Valley, and maybe even what it's like today. Like, is it still the Custo Brasil and like the playing the game on a hard mode, or has that changed?
Yeah. So I think the idea with Peixe Urbano was I wanted to do something in local services. I felt like it was a huge market. I had some personal experience and knowledge in. And we started tinkering with different ideas that we felt would be the way in or wedge into that market. We try to do kind of a sort of a Yelp-like model, right? Taking local content. We had looked at some lead generation for local services, probably more analogous to Thumbtack today. Back then there was Service Magic inside IAC, which was a big success story. And then sort of the Groupon story was just emerging. It was this company out of Chicago that few people had on their radar. And I had heard about it through some folks at Facebook that had been telling me a little bit about it. I said, okay, this is the way in, right? Because there's a great way to build a huge base of local merchants, and then a huge base of customers, right? And we thought about it very much from this marketplace standpoint of, look, we need supply and demand. How we get them on, we're almost agnostic to that. But the fact that we're going to have all this supply and demand of local services, then there's many ways of connecting them, whether it's selling coupons, maybe it's making a reservation at a restaurant, maybe it's doing food delivery, maybe it's writing I mean, there's a million things, right? And we did, right? We launched first the daily deal business. We then launched restaurant reservations, like the open table like business.
Interesting.
We did food delivery.
It's interesting. I didn't
competing with
realize that
iFood
that
back in the early
Groupon was
days.
just the market entry strategy, and then the long term strategy was, oh, we can do everything else now that we have the merchants. That makes a lot of sense.
Yeah, and I think that what we're fast forwarding a little bit here, but ultimately that daily deal model proved to be
Yeah,
unsustainable, right? And I think we knew that it was too good to be true at that point. We thought it would be sustainable, we just didn't think it would be as good, and the margins would have been as good as in the early days. So we launched our restaurant reservation business only a year after the business launch. So it was right away we were
there was an
launching
open
these
table
other
already, or no?
adjacent
Like, was
verticals.
it a
There was no open
okay?
table. I mean, to this
Because
day, actually,
often you don't want
online
to be
reservations
like
is tough to
boiling
do.
the ocean. You don't want to be everything to everyone, right? Like, you really want to own a category.
Yeah, and we were thinking, look, we have, I don't know, 10,000 restaurants on the
Yeah.
platform. These guys have a lot of needs, right? And can we dilute this CAC that we have from the sales side across all these different products and monetize them in different ways? So it on paper it worked well, and I think in practice it worked well for a while as well. But the sheer size of the daily deal business in terms of revenue and speed and everything, it just engulfed all of our attention and all the focus of the company. And it was hard to, I think, escape that black hole when it in fact became a black hole when that star died.
And did Groupon die, or did they pivot to something else, or
No, so Groupon, so actually, just to give you a sense, Groupon was probably 6 to 9 months ahead of
okay?
us. But the curve that you would see on everything, and we would compare to all the other players around the world, whether it was in Korea or Russia or Australia, we talked to all these guys, and everyone's curves and cohorts and all the metrics it was scarily the same all over the world. So the model really behaved similarly. And Groupon, to give you a sense, it went public, I think it was 4 years after the founding of the company.
Okay.
It quickly skyrocketed to $30 billion of valuation, a massive company. A year later, it was worth a billion or two, right? So again, huge peak,
Yep.
massive decline, and then it just went sideways for a very, very long time. Today I don't know where it is, but it was like trading at sub-billion-dollar market cap for a
Okay.
while.
Um, and so was the down because there was too much competition, or just because I think there were like five or six, there were like four or five players like ClickOn or whatever, all well funded. I know my brother worked at one of them. Or was it just the model itself was not sustainable? Because you would think, oh, I now have these merchants, I acquired them with lower CAC, and maybe the core business doesn't work, but now we're doing open table and delivery, and maybe there's something else that could work. I mean, I know iFood is crushing. I know a bunch of other businesses are doing really well. So I'd love to hear like
Yeah.
how that ended up playing out.
I do definitely think that there could have been a play where you use this as a market entry, and then you evolve into a more sustainable model. And you just need to have enough time for that to play out. And I think in our case, it was just so fast that we didn't have a chance to make that next move. But Coupang in Korea,
Yeah.
massive public company today, the Amazon of Korea, started as a daily deal company. Bom Kim and I would talk every
Yeah.
2 months and compare cohorts and everything else. So that's a clear
We
example of someone
invested
that
in
built a
Coupang
huge user
when they
base and
pivoted to
went something
becoming
else.
Amazon. So we waited until
There you
the
go.
unit economics turns, and then we invested, and it's been one of our best investments ever. So know the story well.
And that's a good example of a company that was able to make that pivot. I think Snapdeal in India for some
Yep.
time was doing fairly well. In Australia, the players I think went into travel. I think the same thing went into Russia, but same thing with Russia. But basically, it's like you build a huge user base. I mean, when we sold the company, we had over 1 million, and this is after having shrunken the business. We had over 1 million people a month buying on our site. So big consumer
Yeah.
property, and you could pivot that into anything else. We were unsuccessful in our pivot, but I think other places in the world where they maybe had a little bit more time or the market dynamics were a little bit different, they were able to make successful that pivot.
So how much did you raise
And
total, and did you have to fire most of the people and go through the way down, or did you sell it to Baidu before then, or how did that play out?
we sold. We raised a little over $100 million
Okay.
over 3 rounds. think the last round was maybe like an $80 million
Okay.
round, or sort of like pre-IPO round from T. Rowe Price and Morgan Stanley. And then we had done like a Series A and B before that. We sort of through the turnaround phase, we fired about 2/3 of the people
Okay.
and cut about 85% of the cost to get the company back to profitability. So a lot of people obviously were let go, and a lot of it was because we shut down markets,
Yeah.
right? So we would shut down a country or a city, and then everyone related to that would go with it. But a good third of the group, right? It was, I think, around 400 people when we sold it to Baidu. Many of those people had been with
Yeah.
us since the start and had sort of grown with the business. So a little bit of
And did
both.
Baidu keep any of the business, or they just wanted the merchant database, or is it still operating?
No, so Baidu used us as their way into
I
Brazil.
see.
They at that time they were expanding beyond search. They wanted to do local services. This is actually when they did the big Uber investment,
I see.
actually. So they were doing all things local, and they wanted to go into Latin America. So they wanted to, they saw that search in China was saturated.
Yeah.
What's next? And they saw us as a great way to come into Latin America through local services. So what they actually did was they bought the company, and then they gave about some equity
Yeah.
upside for us going forward for the management to stay, but wanted to keep everyone
Yeah.
kind of as it was because they didn't really have much of a team in Brazil.
Makes sense. Santiago, I'll keep your question for later when we cover Julio's venture experience, and I'll pose it then. Um, how different was it? Because you had come from operating in Silicon Valley, and all of a sudden you're in Brazil. I mean, obviously you're Brazilian, but like you hadn't built companies in Brazil before. How different was it to be operating in Brazil back then than in Silicon Valley, and what did you think of that?
You'll remember this, but Brazil in 2010 was really for the first time coming out of the dot-com boom and bust. I think the US started rising out of that in maybe '04, really, maybe '03, but '04
Yeah.
was when you were having kind of the Google IPO, Skype getting bought, YouTube, Facebook getting started. But Brazil, that really was happening in maybe late '09, 2010 when we started. So what that meant was that the people that were here didn't have a lot of experience working in tech in this sort of new era, right? You had a lot of big companies, Mercado Libre, chief amongst them, that had emerged out of the dot-com boom and bust and were growing, but we're still kind of Web 1.0 companies. So the most challenging thing was getting people that had experience in tech, and I think specifically in software engineering, right? Thinking about how do you put together like kind of a world-class engineering team, not a software factory, which I think is what a lot of the local bias had been, in the way that I think I had seen and lived through in Silicon Valley. And then I think all the adjacent functions, right? So product management, product design, these things like didn't even exist in Brazil at the time. So what we ended up having to do was we brought a lot of folks from the US, people that I knew that wanted to come down here, and they would be, there's our new head of product, there's a product head of product design. And then we would hire really great local talent that had the great, I think, raw skills, and then train them under those, I think, foreigners, really. So it was a lot of just building things from scratch. I think the other thing on that building from scratch point is that a lot of the infrastructure for building companies wasn't existent. When you thought about processing payments, for example, payment gateways and wallets were just really nascent. Didn't work well, didn't convert well. So we, for example, built our own payment gateway in-house. Customer support, right? There's no Zendesk, so you build your own customer support software. Email systems for the scale of emails
And you
we
could
were
not just
sending.
use
A
Zendesk?
lot. Oh, Zendesk didn't
Oh, it
exist.
didn't exist, I see.
Or like,
Yeah, yeah. All right, so
yes,
it's
I mean,
more about
all these guys.
early in
It's
the
like,
tech development in general, not just in Brazil. And I mean, other
yeah,
than the talent thing,
but
what about things like I don't know, tax, regulatory, legal? That wasn't a big deal, or local cost of operating.
look, there is, as you alluded to, Brazil cost,
Hmm.
right? There is more bureaucracy, more complexity,
Yeah,
more uncertainty. I maybe take a little bit of a different view that those are costs and risks, but they're all
They're manageable.
solvable. They just cost
I see.
more, right? Just have to maybe hire more lawyers and spend more on it, but you eventually get it done. Maybe it takes a little bit
Okay.
longer. You grind through it, and I think it was the case back then, and I still think it's the case now.
Okay. So just in the interest of time, maybe we'll gloss over the next experience. So then you go back. You go back to the U.S. You try to build a company. It doesn't hit product market fit. Um, when that happens, there are usually multiple options. One of them is let's try another company. Instead, you decided let's become a VC. Could you talk about like what went through your mind that led you to do that, or
Yeah, I think that after Peixe, I I wanted to have another at bat, right? The story didn't end the way that I wanted it to. I sort of had still a big chip in my shoulder that I wanted to have another opportunity to prove myself, and went to work at Benchmark Capital as an EIR, and kind of fell in love with this idea that one of the partners there, this guy Scott Belsky, who had just joined, had been kind of working with Garrett Camp, who was the founder of Uber, on thinking about the future of work. And kind of fell in love with this idea and felt like, hey, this could really be the opportunity for me to get it right this second time, or get the company built. I wanted to have a big sort of long-term company that goes public and is sort of a huge success, which is what we didn't do with Peixe. Um, and that's how I ended up joining as sort of a CEO there, and ultimately it didn't work out. And I think after that didn't work out, I felt
Garrett
like
was
that
building the
had
company
to.
with you? It was co-founder or something like that. You said.
Yeah, so he wasn't a co-founder in the day to day, but he helped to fund it and kind of incubate it out
Oh,
of
Expa.
Expa, his
Okay,
startup
so
studio.
Expa and Benchmark
So the
co-built it.
company, yeah, the company was financed and started by Benchmark and
Okay.
Expa. So Garrett was, I don't know, part-time
Yeah,
advisor.
chairman or
He was on our
whatever.
board and was an advisor and was
We do
active,
the
but he
same thing
wasn't
here
there
at
day to
Studio
day.
Level.
Yeah, exactly. So he was helpful, but wasn't there day to day, obviously. Um, Yeah, so then, the decision at that point was kind of like I had this entrepreneurship thing out of my system. I was like, look, I've done it twice. I've done it in different markets. I've had different levels of success. I'm kind of done. And that was very much a personal decision not to start a third company in that case. And I had already been flirting with the idea of going into venture even before Prefer. And at that point I felt like, well, now I'm ready, because the thing with venture is that you're committing for 10 plus years,
Yeah.
right? So you really have to make sure this is what you want to do for pretty much the rest of your life, or a huge chunk of your life. And at that point, I felt like, okay, this is the right thing. And I think the analogy that I often hear used and that I like is that being an entrepreneur is you're a player on the field, right? And I think being a venture capitalist, you're much more of a coach. You're still on the team, but you're not playing, right? You're not in the driver's seat. You're helping the team be successful, and you're being supportive, and you're along for the ride, even though it's not your ride. So I felt like it was a good way for me to still have my feet
And
wet
you
and get my
wanted to
feet wet
move
in terms
back
of
to
entrepreneurship,
Brazil.
but not be all in on one single company.
That was an intention. That was intentional as well. Say, hey, okay, let's leave the valley and let's go back to Brazil.
Yeah, I always wanted to come back to Brazil, even when I went back to the Valley. That was my
Okay.
plan. And after that company didn't work out, I said, okay, now I'm going to go back, and so I'm going to do this. I also felt like, a bit being sincere, like starting a fund in the U.S. is a very different ballgame than starting one in Brazil, right? Especially for me, where I have
Sure.
a huge edge down here, and I'm just one more person in the U.S.
So tell us a bit more about Atlantico, like size. So I think you mentioned early on you're focusing at Series A, but like maybe tell us about like when you raised the first fund, where you're at right now, how many investments you've made, anything, any highlights as well.
Yeah, we raised an $80 million fund in 2019, 2020. So we started investing in the beginning of 2020 with a strategy that very much was a copy paste of what I had seen at Benchmark. So we wanted to build this hyper focused, smaller fund size that could really be like that 10x plus fund, right? Our internal goal has always been, how do we become the number one investor in the region, and very specifically define number one as being the fund with the highest multiple on capital, which is, again, taking a page out of the Benchmark
Yeah.
playbook. And to do that, we felt like we wanted to build a more concentrated portfolio, 15 to 20 companies per fund cycle. Fund cycles are 3 to 4 years, so we're quite selective when you think about speed of investment compared to, I think, some of our local peers or even global peers. Um, and with that view that, look, we want to be able to put money when we feel there's a high level of conviction or confidence here behind this investment so that these can be really global scale venture home runs.
Yeah. So you made how many investments today?
We've made 16 to date out of Fund One. Probably have enough dry powder for another one or two
Okay.
more. And then the plan is to go on to Fund Two by the end of the year.
Okay. So you're going to go raise fund two at the end of the year. Okay, that's great. Two quick questions so they're related, and then we can move on to the report. One from Santiago Celestia. Hi, Julio. I'm Santiago from Uruguay. I just completed my master's in management in Germany, and I'm eager to start a career in VC, especially in Latin America. Any advice for a young graduate like me? Thank you. How does one break in VC in Latin America?
Yeah, it's not. The question is like, how do you break into VC anywhere? It's very hard, right? So let's start with that. Um, and I think that it involves a lot of hustle and a lot of luck. I think you have to go out and I think meet as many people as you can that are running funds. Just kind of get in the action. I think try to show what you can do. I did a lot of free work for people, whether it was companies or investors, and maybe source deals, help evaluate deals, just kind of get in the flow in some way that adds value rather than I think sucks up value. And then the luck is, at some point someone's gonna hopefully like the work that you do and like you, and some space opens up. VC funds are small, right? So there's just not a lot of seats. So you need to be lucky enough that there's an open seat that fits your profile. So there's not a straightforward recruiting process in most places. There are a few larger funds or funds that are, maybe have programs and they have recruiting cycles and you can go and identify those. But it's just a lot of hustle. And what I probably do is try to think about what are you going to be doing while you try to break into VC, because this is something that could take years to find the way in. And my advice would be either go, work at a startup, get your hands dirty, see what it's like to be an operator, build a little bit of that empathy, build that network out. Or potentially if you've never worked, that didn't get a sense of Santiago's background, but if you've never worked anywhere, I do think that working in whether it's a bank or consulting company or some professional services for a couple of years, it's just a great way to learn how to work and learn how to be professional and I think network. I think in particular, I don't know, Fabrice, what do you think about it? What do you tell people?
A few points, right? Like, first of all, there are not very many VC firms to begin with, especially in Latin America, and they have very few openings. I mean, we have like we almost never have an associate or principal opening unless someone left for some reason. And so we do hire 2 analysts per year in a 2-year program, but it's very, very few new jobs. And I think to your point, it needs a hustle, typically with people with experience. So go work in consulting, go work in banking, join a startup, build a startup. Let me give you the story of one of our early hires from Argentina, Guimar Vacacetic. He had worked at a VC like part-time in Argentina, and he basically emailed me on LinkedIn, but he was like thoughtful, suggested ideas. I said, look, I'll work for you. I'll work for you for free. And I will prove my value. And because we enjoyed the conversation, I'm like, and what he had written, I'm like, sure, let's give it a try. And he started from a unpaid analyst to analyst, and eventually made it all the way to junior partner before he went on to go and build a startup. So, but he had a lot of a hustle, and he was absolutely amazing. So I think your recommendation is spot on. Understanding it takes some luck because there are very, very few openings. 2 quick other questions. Amarlara Nikani, sorry if I butchered your name. Hi, Julio. How's the growth of OTT and streaming platforms in South America?
Netflix is huge in Latin America. I mean, honestly, as it is everywhere in the world. Very dominant platform down here, and Spotify is as well. Those are
any local players. That are
Global, which is the big media company down here. They have something called Global Play, which is their streaming platform, which is I think quite successful as well. But ultimately, it's like Netflix and Disney Plus has been getting some traction, but mostly Netflix and Spotify, I think, as it is everywhere in the world.
And another question from Zachary Magnin. Can you speak to your view of the scalability of businesses that are tech enabled but also have a close interaction with the real world, hardware, labor intensity, but are not purely software worlds of the world SaaS? For instance, Solfium, which I assume is his company, but I'm not sure, which is a distributed solar curated marketplace in Mexico. Would that be interesting to you?
So I think just taking this from the top, tech-enabled businesses are a big part of what we see in the region, and we've invested in a lot of them, and we've been very successful with a lot of them. So it's not a deal breaker. I think as an investor and as an entrepreneur, I think you just have to be thoughtful about the capital required, the risks that you're taking, and every business is different, right? So it's hard to give kind of a one size fits all answer, but I think being thoughtful about it and thinking about how you're going to access capital, especially if it's a capex heavy business, as you know, solar often is. I don't know about the specific solar business, but how you're going to access capital in a inexpensive way and have a good return on that capital is key. Hardware, same thing. I mean, hardware is the same. It's kind of the same challenges, right? It just takes longer for you to iterate, for you to learn. Therefore, there's more risk. Usually, there's more cost for each iteration. Therefore, again, more risk. Doesn't mean that we wouldn't do it. We've done actually, we did an aquaculture marketplace, which initially actually started as a hardware solution that would measure, fish in the water. Eventually, that hardware solution became a software solution in a phone using computer vision and AI to kind of get the same kind of metrics. So I wouldn't say that we rule out hardware, but it definitely has a higher bar, I think, for being investable. One of my partners at Atlantico is a Brazilian called Hugo Barra, and he was the head of product for a long time for Android through the first billion users at Google, and then moved to China to run Xiaomi for everything international. So he's got a ton of experience in hardware, like on the cell phone side, and most recently started a healthcare diagnostics company, a little bit of a sort of a home kit for testing for COVID and other diseases. So we've also lived through hardware, and we know when that works and when it doesn't work, but it is quite nuanced in terms of who invests in it, and it's much harder, I think, to raise. Again, Fabrice, I'm curious what your advice is.
Yeah, these days I'd avoid capital intensive businesses like the plague. Tech enabled doesn't bother me, but hardware more so for multiple reasons. One is it's capital intensive ex ante, and the problem is if you make it work, you typically end up having so many competitors that just like try to margin compress you. So if you look at all the 3D printing companies, all the drone companies, etc., and if you miss one of the upgrade cycles, you kind of end up dying. And so hardware we try to avoid. That said, tech enabled, depending on how tech enabled it is versus are you purely a services business, we look at, we invest in. One more question, and then we'll move on to the topic du jour. Daniel Muniz Silva. Julio, do you think LatAm can produce global AI winners given the intellectual level of competition and the challenge of global distribution from the region?
Definitions are important here, right? So I think AI is a big word. I like to think about just maybe the different layers of AI. At the maybe the very bottom one, you have hardware and chips, and the likes of NVIDIA. That's like we were saying, that's a big boys game, and it's really no one's to be had except for these big players that are already in it, and no company in Latin America is. And I think similarly today, the big LLMs, right, the big sort of foundational models that you have today to train these models next generation, and you're probably talking about $10 billion type thing. So again, it's 5 companies game in my view in the world, and therefore those companies are not in Latin America today. Then the next couple layers, which you could say there's maybe an infrastructure or like enablement layer of how do I help new companies access and use AI. I think that those are traditional technology companies, right? They could come out of anywhere. And I think that they could come out of Latin America. We do have great technical talent, so I think that's a very viable path. And then I actually think that, and so those could be global companies. I think like many companies have been. I think we actually in Brazil in particular have a history on the research side of being quite at the forefront of machine learning research. If you look, actually, one of the biggest, contributors, I think maybe that one of the biggest accessed models on Hugging Face is actually by a Brazilian here in Rio. I think we compete on a global scale when it comes to talent. I think we just have less people that are in that market, and therefore you have less shots on goal. And back to the luck, you need to have a lot of shots on goal, and probably U.S., Silicon Valley, and China have the most shots on goal, and probabilistically the next big companies are likely to come out of there. But I do think it's within the realm of possibility. And then at the final stage is really at the application layer. Companies that use AI to do something that wasn't possible before or somehow enabled, and get them speaking here fairly theoretically. And if you think that there are problems or data sets that could become a competitive advantage long term to building a differentiated application, and maybe it's Latin America is one of the places where you have the greatest levels of fraud in the world. So could you use some AI-enabled company for cybersecurity or fraud prevention? And because we have maybe the hardest problems to solve, your solution that works here could work elsewhere. Again, I'm being theoretical here, but that's kind of like one of the areas we could have an edge. The other one is, if you built a few things that require local data sets, either because the data is different geographically, or maybe because there's regulatory reasons why you can't access it, right? So if you think about financial services, healthcare, a lot of times country by country, you have different regulation. You can't just take all your patient data and feed it up to OpenAI because the government won't let you. And therefore, if you're able to train a model on the local data and you're able to exclusively access that, you might be able to get to scale and build a better product that might work globally. I'm just giving some ideas here. So I think that global winners out of AI in Latin America are possible on the infrastructure or sort of enablement layer, as well as application. I don't think they are probable because, again, we have less shots on goal. So I think that in all likelihood, the application layer leading to local or regional winners is where I would put my money. And if you have maybe a 1 out of 100 chance that those regional winners become global winners, that's great. But that's not what I would expect to happen.
I totally agree. So you just published the Latin America Digital Transformation Report 2023. Maybe you can tell us what the origin of that report is, and then we can talk about what are the findings are, because there's 130 or 40 pages in there. It'd be interesting if you could distill that for us.
Yeah, over the next 3 hours or so that we'll be here. But the idea of the report was we saw what Mary Meeker had built in the US with internet trends over 2 decades of really becoming the source for people that wanted to learn about internet. And we saw that was lacking in Latin America. There was no canonical source that people would look at and say, this is the data that captures what's happening in. We went a little broader than internet, right? Because Mary started her report, I think, in the mid-90s during the dot-com boom. But we were thinking of through this broad change of digitalization of the economy and society going digital, what was happening in Latin America. And we decided to spin up our own report, right? We copied Mary Meeker's approach, but gave it a Latin American flavor and started just boiling the ocean in that first year, just getting all the data about everything.
What was the first
private
year?
Private data sets, public data sets, 2020.
And so is it public data sets? Do you do surveys? Do you have it feels very consultancy.
So we did.
Your monitor background.
Yeah.
shows.
So we did. Yeah, it was a mix of public data sets, private data sets that we oftentimes got from companies. So you'll see every year we have between 10 and 20 cases, we call them. They're like a one slide view of what a company is doing. And to build a lot of them, we ask the company for their raw data in many cases of what's going on, and they'll share it. So that's very, very interesting. And sometimes we'll take that data and we'll splice it up to somewhere. And a lot of it is just the intersection of public and private data to run new analyses that we do. And then a lot of times we have questions that don't have answers. So we'll go and do our own primary research, right? So we've done primary data analysis. We do a lot of surveys every year, usually about 5 or 6 surveys with different groups, whether it's founders, whether it's public companies, whether it's students and everything else. And then we'll collate all that data see where there's some insight to be had and package it up. And then usually at the end, try to package up all those insights into a coherent storyline, right? That we think captures what's happening in the region. And Fabrice, you asked me what the takeaway was, or to distill what's going
But
on
actually, before
this
we distill
year.
that, let me ask
And
one question, which
yep.
is there's kind of a saying that if America sneezes, Europe catches a cold, and Latin America catches pneumonia, and we've seen how down venture investing and tech activity is in the U.S. Is it just as bad, or is it worse in Latin America? And like, where are we at right now? What is the environment like? What are the outlooks? What does it look like right now?
Yeah, and I think that saying is accurate, but it's also accurate on the upside, right? So it's not just the US is going through a hard time, Latin America go through a harder time. The US is going through a good time, we go through an even better time. So it's just more volatile. The highs are higher and the lows are lower, the lows are lower. So that meant that in this big run up now that we've had over the last few years in terms of venture funding, Latin America's run up as a percentage was higher. And then our fall was greater. So to give you a sense, I think over the last year, US venture funding went down something like 45%. Latin America was down about 65%. Um, again, just sharper spikes.
Okay.
And what I would say as well is that I do think that we are now stabilized at a level that's much healthier and much more um, self-sustaining than in the past. Like when we sold Peixe Urbano in 2014, Brazil was going through the worst recession in history, and almost all the foreign capital left. This time, huge drop in venture capital, but a lot of the foreign capital is still here. So we saw a lot of growth shops or even early stage venture shops in the US that are long term committed here. And I think it's important for the resilience of the region. The other thing that happened is that we now also have, as a region, a lot more trade with China than the US. So skipping ahead a little bit, one of the themes that we picked out was this emergence of Latin America as almost this unexpected winner in the greater polarization that you see in the world between US and China. And being able to see the benefits of nearshoring, for example, in Mexico, or the growth in the demand for commodities that are required for the sort of green energy transition out of Chile or Brazil or Bolivia, which have a lot of the sort of world's largest reserves for some of those minerals. Or eventually just thinking about how sort of macroeconomically we've been a little bit ahead of the curve in terms of lowering rates. I think are all things that I think have kept the region pretty independent and pretty resilient, despite I think the U.S. going through a tough time.
What's giving us pause right now is historically when we backed, we would find in downturns seed and A capital in Latin America, and right now between you at Atlantico and Kazakh and Monashees, et cetera, do I think there is seed and A money available? My concern is more, is there B, C, D, E money available right now? I mean, SoftBank probably is like retrenched completely, Tiger, et cetera. Like, is there really follow-on capital? And if the answer is no, I guess it probably has consequences in terms of like, what are the things you're investing in and how much cap runway people need to have, et cetera.
Yeah, I appreciate the point, and I'm going to give you a different view on it, and I'd love for you to push back on it. I don't think that the growth capital is what matters, to be honest. And this is going back to our initial conversation around the power law, right? In an early stage venture portfolio, whether it's my Series A's or your seeds, all that matter are a few of the companies that are these massive home runs. The rest that are in the middle, from a return standpoint, it doesn't move the needle, right? And I believe that even though we have a lot less growth capital than we had, I think in the peak of 21, which I do think that was the outlier, not where we are today, I think you have enough capital for the outlier companies, and that's what really matters. I think in 21, the marginal company that got funded tended to be a lower quality company, and it was a company that ultimately was going to go out of business or just wasn't going to go public or wasn't going to be a good return. So you were kind of delaying the inevitable by giving that company capital. And I think today we're back to the levels where, the good and great companies have access to funding. Some portion of that are eventually going to become large public companies. But the companies that were marginal, that were the okay companies, maybe they'll have a harder time getting funding. And And I think that that's okay. I think that's the way that venture works.
Have you been seeing exits? Because part of the issue is there's been a lot of write-ups as companies have been going up and doing well, but like there weren't that many real public exits the last few years, or even full-on acquisitions. Like, has that changed, or are there a fair amount of exits really happening?
I do think that was a question when we started Canary, for example,
Yeah.
in 2017. It was all about when are we going to see exits? And then you started seeing it a year later, right? So we started Canary in 17. 2018, you had the first kind of billion-dollar plus exits. You had the 99
Yeah.
acquisition by Didi. I think that was reported to be $1 billion. You had the IPOs of Stone and PagSeguro and the U.S. stock exchanges, two different fintechs in the payment space. And then you actually started having more and more IPOs in the years that followed. I think there were companies like VTEX out of Rio, e-commerce enablement,
Yeah.
right? Went public, I think hit something like a $3 or $4 billion valuation. DLocal out of Uruguay, right? Huge $10 billion plus success story of fintech out of Uruguay. Nubank, I'm obviously leaving the best for last, right? But $40 billion plus publicly
Yeah.
listed technology company, and many other ones. And the M&A side, you had Auth0 out of Argentina, that was I think $6 billion acquisition. More recently, just this year, I mean, in the middle of this down cycle, and I think illiquidity cycle, which had Pismo, which is a
Yeah.
banking infrastructure provider out of Brazil, getting bought by $1 billion in cash by Visa. We had a couple of years ago Corner Shop being bought by Uber for 3 billion, 2 or 3 billion, if I remember correctly. So we definitely have seen the exits. The other thing that we saw that was surprising, and I've only listed the $1 billion
Sure.
plus exits, which I think we in this year's report actually we counted there were about 12 of them that have happened over the last 5 years, and they generated over $80 billion of equity value. But there are also a bunch of other smaller ones, right? So you had over 20 tech IPOs of companies that went public in the Brazilian stock exchanges. So we mentioned Melius before, right? That's an example of a company you and I invested at the seed, went public in Brazil. It's not $1 billion plus market cap, but at its peak was a reasonable company. I think we made like a 70x on it,
Sure.
of when we sold. So still allowing for good returns for those that come in early.
So
I think the other
yeah.
thing, Fabrice, if I can keep going here a little bit, and then I want to hear your reaction to this, is I also think that all of this that we're talking about, these companies that went public in the last few years, there were companies that were started, I don't know, 10 years before that, where we had way, way less capital than we have today, right? Like literally when we started Peixe Urbano 10 years ago, there was one venture fund that existed in Brazil, and that was Monachis, and they were like in their fund one or fund two. So the fact that we were able to produce this much with so little capital, I think it does give reason for optimism now that we have more human capital and more financial capital in the region.
Yeah, no, look, totally agreed. I mean, what's interesting is we actually looked at our returns, realized returns on our funds, and obviously we're global, right? We're investors in 1,000 companies, and what's interesting is how similar or realized IRR were in every geo, and actually LatAm was higher IRRs than we had elsewhere. Partly for the reasons you described. When the winners win, they win big, and the entry valuations were low. Like Milius, which I think went public at like a 400 million valuation. We invested at like whatever sub 10 million valuation, and so of course the returns were extraordinary. And it doesn't take many of these to make the region look great. And no, we're very bullish. Still at the very beginning of the tech revolution writ large, and even more so in LatAm, and even more so when you think of like things that we're interested in right now, like B2B marketplaces, like digitizing supply chains that have been mostly offline, which have not at all been digitized, or helping SMBs go online and compete with the bigger chains. All of that is like it's in infancy in the US and even more so in Latin America. So very bullish. And I suspect that we can get into more of the details of the report, that your perspective is similar to ours. Like now is the very best time to be investing.
Yeah, exactly. I agree 100%.
Yeah. So any other, okay, so you highlighted a few things, that now there's capital that's kind of here to stay, that the winners are still getting capital, that LatAm benefits from being at the intersection or the war between China and the US, in the sense that it benefits from investments from China while actually getting nearshoring or friendshoring away from China locally by U.S. companies. Any other like really key themes that came out of that report for 23?
Yeah, the theme for this year was we called it tectonic shifts in Latin America. You need to have a little bit of drama to make it more interesting. But the view was very much, look, there's these huge changes happening in the region, and with change comes opportunity, right? And what we wanted to highlight were the changes. We don't necessarily know what business model is going to emerge to take advantage of these changes. And honestly, I don't think that as an investor, it's my job to kind of predict the future, but it's really to be alert and know what's happening so that when someone does come up with that sort of great insight and great way to grow in this new market, we can be the first ones there to bet on them. So we talked about, I think, this macro geopolitical function. We also talked about, I think, a little bit of the venture funding and opportunity set for the future. I think those were two. There were five trends that we talked about. The third one that we did was AI. You and I talked about it a little bit before, and we can go back to it. And then the last two were, one, we called it the kind of democratization of digitalization, which goes to show that not only are more people online and they're accessing their bank accounts online and buying stuff online, but actually the demographic makeup of the internet and technology users today versus 5 to 10 years ago actually much more closely reflects the population. In other words, you have a lot more folks from the middle class and lower income classes that are online. This has pushed a lot of the decision making to be more kind of cost and value driven than we had in the past. And those players that have been adapting to that reality have been growing. I think a huge success case this last year has been Shein out of China, right? Sort of low cost, fast fashion provider in Latin America has been growing incredibly fast with kind of this cost advantage. Shopee as well, out of Sea Limited in Singapore, had a huge run up over these last couple of years playing this low cost game. These are two e-commerce examples I gave, and you see similar things in financial services and elsewhere. So that was another big theme. And then the final one out of the five is this idea of money truly going digital. And we can go into fintech here if you want. But I do think that Latin America leads the world when it comes to a lot of
like
fintech
picks,
innovation.
right? Like having real time.
I think one example, like money going digital, we talk about it in two ways. One is payments going digital, which is around Pix, right? So for those that don't know, Pix is that the instant payment rails that the Central Bank of Brazil launched a couple of years ago, very similar to what you see in India with UPI. And we see today Pix being used to make payments like on a daily basis, twice as much or twice as often as cash, right? So like Pix has, definitely eaten payments. We see Pix as a way that most transactions are now happening in Brazil, and that's only growing.
For US
but the other side of it is that actually
essentially free real-time payment solution, and you can use it, consumer to consumer, consumer to business, business to business. I mean, it's really extraordinary, like UPI in India. And I cannot wait for something similar to come to the US and Europe, where basically we're currently, living under the Visa, MasterCard monopoly with like a 2%, 3% tax on all transactions. That should be zero. And also the fact that if I wire someone, the fact that it's 3 days to get there and there's no real-time tracking is insane. And it costs $10, $15. So it is so transformative that it's interesting this came out of Brazil and India before the US. But I can't wait for it to come here.
Yeah, I mean, just to give you a sense, we back to the primary research we do, we do research with a big research institution here every year. So this data is representative of the population as a whole. And we saw this year that 43% of Brazilians use Pix on a daily basis. Yeah. Compare that to 21% using cash, so less than half using cash on a daily basis. And I think it was 29% using payment cards. Yeah. So Pix by far the biggest means of exchange.
I think the other thing is actually interaction with some real-time ACH. So maybe something like that is about to launch in the US. I haven't looked at the details on the consumer side. I know it's not adopted. How long did it take for Pix to become widely adopted? Are we talking like a decade? Are we talking 5 years or
2.5 years?
2.5 years. That's so impressive.
So like it's been incredible, right? Like really incredible. I've been saying everywhere that I actually think the world's most successful fintech is the Brazilian central bank. And they invested, $5 million to build this thing out because they obviously pushed out a lot of this to the big banks to implement. And I think, you and I, like network effect businesses, And it's like a very interesting
Yeah.
strategy here, right? Because how do you bootstrap the network? It's like, oh, you bootstrap it through regulatory power. You basically mandate everyone to have it on the home screen of their payments thing, and you build a network, which is a payment that on top of your payments rails. So it's actually kind of a funny, a very curious case study.
And what did you mean beyond picks, actually?
Yeah, so I was going to say beyond picks, the way that people interact with the financial system, and that's like investing or saving, interacting with the bank. Today, these are data, internal data that we got from the central bank of Brazil. 95% of all interactions with financial services are digital, whether it's on mobile or desktop. That used to be only 30% 10 years ago, right? So we've gone from a fully going to the branch in-person world to a entirely digital world when it comes to the financial sector. So again, that's a huge change in the world. What are the companies that are going to take advantage of that and use that as maybe a wedge for growth, or see a space there that they can go and kind of attack some of the businesses of the incumbents?
Quick question, I don't know why it comes to my mind right now, but the neobanks in the US and Western Europe make money from interchange. But if people are paying with Pix and there's no interchange, how do they make money in Brazil?
Yeah, so banks traditionally make money through lending,
Yeah.
right? So if you're making money through interchange, that's not the way that traditional
Yeah.
banks make most of their money. And if you look at the neobanks here, take
Yeah.
Nubank, it makes money through lending, right? So it's the
Okay.
credit card product, which is consumer lending, is a big one, and they've just gone into other lending spaces.
Okay. Question from Flavio Camilo. What do you think could be the turning point for clothing-focused marketplaces in Latin America? Is it initiatives like live commerce and social commerce?
I guess the first question is, there's a underlying statement here that clothing marketplaces or e-commerce haven't worked, and I don't know if I would completely agree with that. I think clothing online is always tricky everywhere in the world, but eventually you get there. But
You know, Vinted, by the way, in Europe,
one big
they are absolutely crushing it. They were like maybe they're one of one because like Poshmark and all those guys are not doing well in the US, but Vinted is extraordinary. Yeah.
Yeah, and I think, I talked about Shein out of China. That's a monster
Yeah.
company that's a clothing manufacturer and a fast sort of fast fashion. It's like Zara on
Yeah.
steroids, right? Global. So that's a very interesting e-commerce, or let's actually go back to that earlier question of like the tech enabled
Yeah.
model, right? That's very much a tech enabled business that's crushing it in Latin America. There's a whole discussion around regulatory and import taxes and stuff, but kind of setting that aside from a consumer lens, it's a cost competitive model. On a marketplace standpoint, we've seen, I was a seed investor in Enjoei, which is like a used clothing company that went public here in Brazil a few years back, and they've been growing pretty healthily. Then you have a lot of e-commerce from
Yeah.
the different brands. I think that I don't know. I think to grow, and the question here about live commerce and stuff, I think that the unexplored, or the unlock that still has to happen is around this intersection of media and commerce. And,
Yeah.
and commerce applies to clothing, but I think it applies to other things, but clothing more so. And I think it's around kind of the creator economy. I do think that today in the world, Latin America leads the world in terms of usage of social media. And within those social media platforms, we lead the world in terms of the attention grabbed by digital influencers and the level of influence they exert. So if you think about what media is, we talked about this earlier with the over the top sort of the streaming services, media is
But what
influencers
you just
on
said, which
platforms, and they're
suggests that
creating.
live commerce and social commerce should have totally picked up in LatAm the way it has in China. I mean, in China, 25% of all e-commerce is live commerce, and it hasn't at all in LatAm. It's very surprising, though.
But the question is, does it have to be live, right? Does it have to be live, or can it be an influencer posting a video on
Yeah.
Instagram that therefore drives sales? And I think that that's what's starting to happen. And I do think that there's still one unlock to be had there of some model. Someone's going to crack the nut in terms of how this thing really works. But it is, the media is
Yeah.
there, the influence is there, the reach is there. And that's where people are making decisions of where to buy things, right? And I don't think that the only one to win here is going to be Instagram with their paid ads. I do think that these more native influencer-driven ads are going to be. Maybe it's live, maybe it's not live, but I do think
Yeah, in
that's where
fact,
the next
Instagram, I mean,
frontier
it's not in
is.
their DNA, but they could have an Instagram commerce page or whatever where people could actually sell the things that they're putting in. But it's not in Facebook's DNA to do commerce effectively. Anything we didn't cover that we should cover, either in the report or what's going on in LatAm, or anything you want to say, or any final words?
I don't know. I mean, I do have a few thoughts, but I wanted to hear from you also, as someone that's been super active in the region, how you've seen the region evolve, right, from 10 years ago to what you see it today. What still gives you pause, or you think are the big barriers, and where do you think we've come the longest and evolved the most?
Where we've come the longest is just twofold. One is talent, right? Like when I started building OLX in Brazil and in LatAm in the mid 2000s, or frankly Deremate in the late 90s, or Aremate in Brazil. To your point, we had to import talent basically, and often our tech teams were not local, and our product managers were not local. And now there's been enough examples of local success and local talent that you can actually you have experienced founders, which you didn't have before, right? Like people coming out of the bigger companies and creating. So there is a talent ecosystem that has emerged. There's an overall Rails infrastructure that has emerged as well. We have payments now. We have customer service solutions. You have all the tools you need to go build that are local and hyper local, and you have capital. So I guess those would be the three. And now you actually have local capital with local VCs. I think what's missing is still the follow-on capital beyond words is still not ideal, and it's still too correlated with like US being frothy and growth capital being available. Now, to your point, the very best companies get growth capital. The problem for the FJ model is we're very diversified, and we do live off of the 100x, but actually we make a lot of money on the 2, 3, 4x's. And when those don't exist, and they don't really exist nearly as much, you don't have the acqui-hire model in Latin America. It makes the model, our model, work a little harder. And in terms of where I see the biggest opportunity, I think I highlighted earlier, it's like the B2B marketplaces where we're still in its infancy, and we're very, very excited. Now, the things that everyone else is chasing, like AI, to my point, like every company is an AI company. I mean, if you're not using AI in your company today and doing applied AI, you're probably not going to be competitive. And are there vertical applications that are using local data sets that probably make sense, where you can build apps going after the local market? Probably, and maybe there'll be a few of these, but that's not where we're focusing. We're really focusing on digitizing the offline world, which is we're at the very beginning of that journey. But yeah, no, it's pretty profoundly changed for the better at every level. There are exits, there's capital, there's more talent, there's tools, and yet we're still at the very beginning. And so I think now is an amazing time to invest, because the founders that are left, I mean, the fair weather founders left, yes, the founders left are real builders. They're focusing on cash burn, they're focusing on unit economics. They're building companies that are not too capital intensive, and the valuations are reasonable. So I think now is an amazing time to be investing and building in Latin America. And even as a builder, even though it's not as tilted to you before, meaning the valuations are lower, but you're more likely, you have less competition. You're more likely to win the category. When you win, you're going to have an amazing exit. And so the ultimate net multiple is probably going to be the same as if you raise at a higher valuation, but face 10 competitors all very well backed.
Yeah. I think you captured it really well.
No, I'm very bullish. I mean, this is falls in the series of we did a show in India, and saying I'm so bullish in India. Actually, I have a question for you, because we're talking the region writ large. How do you think? How do you think of Brazil versus Mexico, Colombia, other countries? Like, how do you see it both personally and at Atlantico, and maybe the business in general? Like, are you focusing on one geo versus others? You want people to be regional? Because obviously it's not really one region. It's really different countries.
Yeah, I do think a lot of folks kind of look at the whole region as a whole, but expanding from one country to another is actually quite difficult for many models. Marketplaces are often geographic. Financial services often have regulatory barriers, right? We believe, and this is a reflection of my own personal belief, that there's opportunity everywhere in Latin America, but we do think it is concentrated in Brazil. And the way we think about it is that we want to be overweight Brazil. We think that the Brazil's reached a level of maturation and talent and access to capital that's a little bit different in other countries. Probably Mexico is probably the second country that has the most activity today, and I would still say Mexico is maybe 5 years behind Brazil. I actually really like Argentina. I don't know if you have a soft spot in your heart
I
for
do.
Argentina or not, but I think the best people in the region are in Argentina. And even though the country's done its hardest to destroy itself, there's still a lot of great people there that haven't left. And they're building companies that maybe are headquartered or started in Argentina, but that are focused region wide,
Yeah, I was
right?
going
And
to
the
say the
revenues are
best
outside
Brazilian
of
companies are
Argentina.
Argentine. Which all the
Exactly. The
founders are
best case here
Argentine.
is
They have
Mercado
maybe a
Libre.
tech center in
Yeah.
Argentina. Despite what Argentina, the government and politics have tried to do to the country, and maybe because of that, the entrepreneurs there are like true entrepreneurs.
Yeah. So I also really like Argentina, but I just think that even though maybe venture dollars are usually something like 30 to 40% going to Brazil,
Yeah.
we'd like 60 to 70% of our venture dollars to go to Brazil. But we don't want to rule out those big companies that could, win in Mexico, or maybe they start in Colombia, they go to Brazil, or they start in Argentina, they go to Brazil, or they go
Yeah.
global, or they go regional. So we want to be open-minded to investing in other places. And to date, we've done about a third of our investments outside of
I
Brazil.
think if for of our LatAm investments, we're kind of like you. We're 2/3 Brazil, a third the rest, and the rest for us has mostly been Mexico and Colombia. Now, many of the companies have Argentine founders, and many of them have Argentine tech teams, but usually not going after the Argentina market. They're going after Brazil or Mexico or Colombia. One more
Yep.
question from Amar Al Nikani. One more question. Any insight on the gaming industry in Latin America?
I do know Latin America is one of the biggest players of Free Fire, which is why Shopee is so big here, right? Because when Forrest Lee, founder of Sea Limited, came to Latin America because of the gaming business growing so much here, saw sort of the vastness of the region and opportunity in e-commerce, and then decided to do Shopee here. So we're definitely big players as far as producing games. One company that is top of mind is Wildlife Studios out of São
Yeah.
Paulo, which is one of the biggest gaming studios in the world. And they started from day one thinking globally. 95% of their revenues are outside of Brazil. So back to thinking about global companies, we definitely have kind of global
Yeah.
leaders coming out of the region of companies that thought global from day one. And gaming is one of these globally scalable companies where you have a game and people can really play it anywhere. And I think Wildlife is
Yeah,
a good
they're
example of that.
amazing.
There's also
I
some
went
good
kite surfing
historic
with them in,
examples out of
in trips.
Argentina. Yeah, I was gonna say also like there's a lot of good examples like out of Argentina historically. There's a company, Three Melons. It was a successful gaming studio. I remember there was a quiz game on Facebook a while. Way back in the day, there was
Yeah.
Vostu, which was kind of the Zynga for Latin America or Zynga for Orkut. So we also do have a history of building out games in the region and having different levels of success.
Question from Gaetano Razieri. How do you see the evolution of angel investing in pre-seed rounds in the region? If you're not ready for VC yet, you're pre-launch, how do you fundraise?
Angel investors, right? So the question answers itself, right?
Well,
You
but I
just
think
get
the
people to
question is,
trust.
are there a
Yeah.
lot? Has the number increased? How do you reach
Yeah.
them?
I think that the what you have to do as a founder is really kind of go after people that trust you and that work with you, right? I think a lot of angel investing is based on your reputation, your network. So I would always start there. There's a lot more, there's an order of magnitude more angel investors today than there were 10 years ago, and there's definitely plenty in Latin America. I think that's an area that maybe has dried up over the last couple of years. So I think a lot of angel investors tend to be tech founders, and I think a lot of tech founders thought that they were richer than they really were a couple of years ago, and they probably kind of dialed back their angel investing and probably dialed back how much time and attention they spend away from their businesses. So that's definitely dried up, but it's still there. We still see a lot of angel investors that are active. You now have, seed funds like the Canary being kind of the biggest one in the region, but you have One VC and Maya in Brazil. You have a lot of other players. NXTP in Argentina is a great group. You have a lot of players sort of throughout the region that didn't exist way back when. you guys are doing a lot of seed investments, so not pre-seed, but seed investments. And I'm sure you dip into pre-seed when the time is right and the opportunity is right. So there's a lot of global and local and regional players that are around today that are more institutional aside from the angels.
Perfect. Anything else we didn't cover?
Well, I think we got everything,
Perfect.
Fabrice.
Well, Julio, thank you for joining, and thank you everyone for all the great questions, and we'll see you in the next one.
It was great being on. Good to see you.